Okay, beautiful traders. We are under trade management. So, what's important about trading? It is that after you open your trade and after you set everything, it is very important to manage your trade. So, in this lesson, I'm just going to be teaching you how to manage your trade properly. So, let us get into my screen. So, just as I've been speaking about this, what matters the most when it comes to trading, it is actually your analysis, or actually the way you anticipate the move of the market. Your analysis, it is what matters the most. What you assume that the market is going to do. For an example, if you assume that the next move of the market will be like this, so if the market doesn't act like this, then it means that your analysis is being disrespected, or your the price is no longer moving towards the way you anticipated or towards your analysis. So then the question is, what do you do if the thing happens? So trade management is for that. Trade management is here to assist you. So in terms of an analysis, for an example, let's say here you see that okay, price is going to bounce, going like this, and maybe reversing here, going all the way up, and you take your entries maybe somewhere here, as I've been speaking about in the previous lesson, and you put your take profit there. And then now what happens, all of a sudden price goes down, and when it reaches this level, and it reaches this level, it begins to go like this, as I've been showing you in the previous lesson. And when it begins to go like this, you say, now the price is no longer working on my favor. What am I supposed to do? Do I really need to close, or do I really need to allow the trade to run? So remember, when it comes to scaling in, I told you that if you've opened two positions, you have closed. But then the question is, what if I've opened one position? What if I've opened one position? What is it that I'm supposed to do? Am I supposed to close, or am I supposed to allow the price to continue to do what it wants to do? So that's where you need to again check the movement of the price and reanalyze again. When I say check the movement of the price, that way you want to go down to your lower time frame, meaning now uh, you change the time frame that you analyzed with initially, because you want to see this price in a bigger picture before it comes to a disaster. So then after you go to your lower time frame, that's where you want to see the move clearly, where you will see the momentum. What is the momentum doing in this part of a move? Which side or which probability it is likely for the price to go? If the price is likely to go up, then that's where you say, okay, now the price is going to go up, let me scale out, or let me close my trade in case of a one trade that you've opened, or a one position. So that's what you need to be looking clearly, directly. What is the price moving in terms of momentum, in terms of strength? Are my sellers still showing signs of coming in, or it's like they are really dead? So those are the things that you really need to consider as a trader, and that you really need to keep in mind. What is the price doing? So the other important aspect that you need to do, other than closing your trade, it is as trailing your stop loss. Trailing your stop loss. Checking, where should I trail my stop loss? Is it the right time to trail my stop loss? Trailing your stop loss, it is actually moving your stop loss from where it was before and putting it closer to the price, meaning your stop loss is chasing the price. So that's what you need to consider again, that okay, my stop loss was here before, so now that the market is here, what am I supposed to do? For an example, if you see such thing happen, instead of closing your trade, you can trail your stop loss and put your stop loss a bit closer to the active phase of the market, so that if the market goes against you, it doesn't destroy or deals with your account. So when it comes to trailing your stop loss, let me just raise my screen. Actually, trailing your stop loss, it's all about determining lows and determining highs of the market in a downtrend. In this example, it is actually determining the highs of the market. Once a new high is formed, that's where you're supposed to trail your stop loss. If your stop loss was here when you entered let's say you've entered right here and your stop loss is here. So basically when the market is at this level, you don't want to leave your stop loss up there, because I've seen a lot of traders, a trade can make a profit of $200, and all of a sudden at the end of the day it closes with minus $100, yet it was at plus 200, meaning what was lacking was trade management. How can such a big positive trade turn into such a big negative trade? It is a problem of trade management and trailing your stop losses. So once a new high is formed in a downtrend, you put your stop loss above that high, meaning you will take a stop loss here, you will take a stop loss here, you will take a stop loss here, depending as the price goes all the way down. Even same thing applies when price goes all the way up. When you enter here and your stop loss is here, once price is here, put your stop loss there. Once price is here, put your stop loss there. Let your stop loss go up and up so that you avoid this thing of a blue or a profitable trade turning into a negative trade. This is something that we really want to avoid as traders. So you don't have to be falling under this thing. So make sure that when you open a trade, you are there to watch if the trade is still behaving on your analysis. Is the trade behaving the way you anticipated? If it is not behaving that way, see things that you can change, changing your stop loss, changing or scaling out or scaling in depending on how the price behave. So another thing, you can scale in if the price is moving aggressively. So let us say you plan that price is going to move like this, and all of a sudden price just collapse all the way down severely. That's where you have to say, okay, let me scale in, let me add in this position, let me add more position, let me add more position, taking it to mind that the positions that you are adding, they should rely on the first trade that you've opened. So it should not depend on your account, it should rely on the trade that you've opened before. So I hope it was helpful, and you should implement this, and you should keep and put this into practice. Thank you. Let us go to the next lesson.